With approximately 80% of Singapore's population now fully vaccinated, people are going out again, shopping, dining, working. Now, up to 50% of work-from-home employees can now return to the office. People are shopping, and vaccinated Singaporeans can dine in again. The idea is that with one of the highest vaccination rates in the world, Singapore can pivot from a zero COVID strategy to living with COVID as an endemic. Case numbers will rise with reopening, but hospitalizations as percentage of cases will likely decline, and deaths as a percentage of cases should also likely fall. And that's the same theory driving the strategy in other countries, such as the United Kingdom. But what does all this mean for Singapore's REITs? Well, if the strategy works, it could well mean that we are long past the lows in prices. The S-REIT index has seen a series of higher lows from April of last year, but recently, possibly under pressure from the spread of Delta, we have also seen lower highs, with the index falling some 3% from the July high. The biggest risk that could push REITs prices lower is the rise of new variants, even more infectious and more resistant to existing vaccines. But if the basis of reopening is correct, that vaccines will make the virus less deadly, then what are the buying opportunities? Well, the two biggest losers from domestic lockdowns, retail and the office REITs, could be the biggest winners if this strategy works out. Not coincidentally, the two most attractively valued sectors are the office and retail REIT sectors. Retail REITs are now trading at an average of 5.6% estimated financial year 22 yields and at net asset valuation. And office REITs are at an average of 6% forecast financial year 22 yields and only 0.77 times their NAV. So if you're looking at pure Singapore retail plays, or at least REITs with an overwhelming focus on Singapore assets, then the lowest valuation among those we cover is Fraser's Centrepoint Trust. Price to NAV, 1. And an FY22 expected yield of 5.3%. Now, from the office REITs we cover, the one that has a strong focus on Singapore properties is OUE Commercial REIT, which is trading at only 0.72 times its NAV and at an FY22 estimated yield of 6.7%. But note, this low valuation comes with a couple of hotels that may be later beneficiaries of reopening when tourism resumes. Now, if you think we're never going back to the office and never going shopping the way we used to, don't buy any of this. But if you see a post-COVID normal, then these might be long-term opportunities.